After the granddaughter birthday, Warren Buffett is directly flying to Alaska to meet one of his best friend, Bill Gates, to have some ice camping experience. While they on the boat go through the glacier, he pick up a very serious phone call. The person on the other side was telling him that, look, something serious happening. The New York Fed chair is gathering everybody in the Wall Street to meet up to save this small hedge fund company. Otherwise, it will ruin America's economy. Even all the biggest bank in Europe is participating in this meeting. Are you have interest be part of this? But right about he to answer, he suddenly lose signal because they are going through between glaciers. The company they try to save called LTCM. They have one of the dream team include 2 economic Nobel Prizes, countless Harvard, MIT professor. They even have ex-higher official from the Fed. And after 3-year legendary never seen before returns, they suddenly flash crash. But compared to other company, they just bankrupt and do whatever you're supposed to do. It even caused all the competitors in the Wall Street gather together to save them. In the end, even government have to show up to clean up the mess they had made in economic. I think this is one of the most wonderful story in the history of economic or finance. However, it requires a lot of very hardcore knowledge. But don't worry, I will try my best to use daily term to explain to you what happened. And I guarantee you will have a way better understanding how finance influence our world and why does it matter to you. The story starts from 80s. A company called Solomon Brothers. Now you probably never heard them before because they get acquired by Citibank. In the 80s, 90s, they're the king of the Wall Street. The most strange part of this company is even then they probably have over 10,000 employees and traders. However, 80% of their net profit is actually earned through 20-ish people. And all these 20 people are belong to one department named ARB Group. Like their department name, the financial deal they've been dealing with is arbitrage. You don't have to know what arbitrage is right now. I will explain exactly what it is later on. And the reason why they can be so successful and profitable is all because the head of the department, one of the members in Solomon Brothers, his name is John Meriwether. It's probably very difficult to imagine, but in the 80s, most traders who dealing with millions of trade never even been to college. They make their decision based on their experience, how they do trade before. And the general opinion about academia or mathematicians, they're just a group of nerds, can only do trade on paper. Compared to those traders who never been to college, John Meriwether actually prefer his colleague to be people from academic. They are rational, they trust numbers, they use models, they analyze, instead of just hearing a rumor and buying for a couple millions. And his vision earned the result of Arbitrage Group to become one of the most earning per person in Wall Street back then. However, the good time never lasts long. In 1991, one of the workers in the Arbitrage Group actually makes something illegal in the trading. It causes include the worker, John, and even the CEO for Solomon Brothers at the time to be fired. For Meriwether, this is more like a chance than a loss. Because he was thinking, oh my God, I lead a couple dozen people and sustain a survive of a company of 10,000. Why not I just push my idea of academia to extreme and create my own company? Ain't there a better idea than split the profit to hundreds of people with my own departments? And that's the company he built, LTCM. With his networking and relation, he actually created a dream team for this brand new hedge fund company. They have a 2 economic Nobel Prize winner, lots of different professors from famous school. He even invited the vice chair of the Federal Reserve. He was the one who probably will become the next Fed chair. However, he gave up his position just in order to come to LTCM. In the end, lots of his old workers from Arbitrage Group also returned to him. And here's a little Easter egg. In the beginning, when Solomon Brothers, the CEO left and they elect a new CEO, this group of mathematicians use hours and hours to convince the new CEO why does it work, why they can contribute way more than other workers. However, the new CEO don't buy it at all. And they even almost despise the way they do trading. And that directly causing them left Solomon Brothers. And the CEO who was elected in Solomon Brothers is actually Warren Buffett. And you already can tell what is Warren Buffett's attitude towards LTCM when they fall apart. LTCM hedge fund only open to very small number of private investors, and their rule or condition to invest in them also very strict. When you invest your money in it, whatever they make, they take 25%. Plus, you cannot take your money out for 3 years. Even till now, that is one of the most strict rule for hedge fund. However, because it's dream team, people are rushed to shove their money into LTCM's pocket. And they have one of the biggest opening fund in the history, $1.25 billion. And those trusts that from investor eventually paid off. The first full year of LTCM return is 28%, 59%, 57%, 25%. Also, you probably don't really have a clue how big those numbers are. Let me just give you a little reference. Berkshire Hathaway, the company that created by Warren Buffett that everybody talking about, his company earning profit is as big as Apple, but their year-over-year return is only 17%. Compared to that, LTCM's return is not only as stable, they're also 2 or even 3-fold than Warren Buffett's company today. So, what is their core strategy? The main thing they do different than all other companies is they don't really look at what is macroeconomic, what is the government policy, or even individual companies' financial reports. All they cared about is they pull out the history data, making a model, analyze it, and finding the pattern. And based on the pattern, they earn money. I know it's pretty hard to grasp. Let me give you an example. One of the famous trade strategy they like to do called convergent trade. Use a daily life example. Imagine if there is 2 types of apple that was displayed in your grocery store. One is apple with branches, one is normal apple with nothing. Those 2 apples is actually picked from the same farm within the same time. The only big difference is if there's a branches or no. But one is sold for 8, one is sold for 5. Maybe because one of the workers put the wrong price on. So what they do is they are long and short this 2 type of apple because they know market is rational enough. These 2 things eventually will back to the same price. And they are earning the money through the grocery worker's mistake. And one of the trade they have done before is they find that there's a 2 stock, 99% of the time, they're going exactly the same price. One is called Shell Transport, one is called Royal Dutch Shell. When they dig deeper, they find out both of the stocks is actually with the same team, same financial report, same board of directors. And they even apply the same strategy because they're basically the same company. The reason why they split into 2 different stocks because one of them need to be in the SP 500 and they're facing a different taxation from the government. That's why they need to separate them. So when there's 1% of the time, they're not going to say one is going up, one is going down. They are buying and allowing these 2 stocks because they eventually will converge back to the 99% same trend. Or they will do another type of trading, is betting on obvious odd. Imagine this example, right? Someone is flipping coins. They flip 10 times already. The chances of head is 70%. And they know the obvious odd is when you flip the coin long enough, it will eventually back to 50-50. So they're betting, yeah, there will be less head showing up, there's more tail showing up. Even then, in the beginning of chance of head may raise from 70 to 80, they may lose a little bit money, but eventually will converge back to 50s. One of the real trade they done is actually American national bond. When the 30-year bond just dropped, it's easier to circle around within the market. However, when they drop to 29 as national bond, they may be less easy to sell them. So there is a little price difference. 30-year is 5.5%, 29-year is 5.62%. There's about 12 base points profit that you can make. And you 100% know when that happen, when the drop happen, there is opportunity for them to earn money, because that is an obvious odd, unless America go bankrupt, which never happened. And they earning money through this kind of non-efficient of the market is only temporary. Plus, if other people know what you find, they get ahead of you, you may lose this opportunity to earn this money. So how can they hide their secret? Their answer is, let's do two different deals with the two separate investment banks. For example, we do Shell Transport with Goldman Sachs, and we do Royal Dutch Shell with Merrill Lynch. And they're competitive to each other. They're not going to tell each other what we have done. And then they can hide their secret perfectly. But there is another question. Is, for example, the national bond. They can only earn a 0.12% of the earning. Like they spend so much time, pay so much money to those geniuses, finally find this opportunity. They invest $1 million in. They can only earn, let's say, 10K. That is not worth it. So what could they do to increase their earning through this teeny tiny mistake that the market did? And the people who with a little background of finance, they already know, is increase their leverage. Use a simpler term, is borrow other people's money to bet on this teeny tiny price difference. You need to pay a lot of money normally to borrow money. For example, I borrow you $1 million, you need to pay me 3% with a down payment. But their earning was only 12 base point. So what they do is, because this dream team and the legendary income, a lot of big investment bankers even willing to borrow them money with extremely low fee. They even willing to take a cut. For example, they take 2 base point cut for your deal. So I can borrow you money. In the end, they be able to have about 50 times leverage. A 1% earning through chance suddenly become 50% profit. In the same time, when they increase their earning, their risk is also raised to 50 times. Because they have a 50 times leverage, which means if there's a 2% normally up and down within the market, they will go bankrupt, because 2% times 50 is 100%, they lose everything. So how could they eliminate their risk to make the income stable? That's the time the mathematicians stand up again. They use a variety of different ways to clear out all the risk. For everybody know is not putting the egg in the same basket. They start finding different investment combos so they can cancel out each other's even volatilities. Use a day-to-day life example is, imagine you're a boss and you have 100 workers. Sometimes this worker perform well, sometimes that worker perform not well. Because you have 100 very good talent, they perform bad and will cancel out the perform well. As long as all 100 of them are best of the best worker, you have a guaranteed no turbulence well production within the company. And that's basically what have they done. All the risk is clear in the mathematical way. In 1997, the math genius gave the report to the higher official of LTCM, and the chances of bankrupt at the moment, even then they have a very high leverage and a very risky trade. Their chances of bankrupt is lower than 0.001. In their own term is, it only will happen once since the birth of universe. And of course, to find this irrelevancy between their investment combos, they actually sniff out every corner of the financial market, through foreign bond, to stock market, to metal markets, etc. In the end, they cannot even find one more irrelevant financial combo. So they even return lots of their cash to their investor, while their assets maintain the same, which means they even increase their leverage even bigger. However, those math geniuses ignore one obvious fact, is black swan. What is a black swan? Back to the grocery shop example. On the normal day when everything going normal, the price of apples and price of eggs and price of toilet paper are on their own. Only depends on the demand of the people around you. However, when there is something emergency happen, like an earthquake or COVID, people suddenly rush into the market, buying the apple, regardless the price, regardless the difference with branch, without branch. This is $3 more expensive. I don't care. I grab whatever I can. And it even make the rest of the product within the store become relevant. I walk in, I want to buy apple, but apple is not there. But because I'm in panic, may as well just grab some toilet paper instead. And that black swan happened in June 1997. When Thailand's economic system absolutely lose function and crashes, even cause a whole Asia economic crash. That influenced Singapore, Malaysia, Philippines, Hong Kong, Korea, etc. Everybody is turning their money into safe assets. Because it's panic, people start buying 30-year bond and SP 500, which include the two trade we has mentioned before. And the people don't care these two companies have the same financial report, same board of direction. As long as I can buy SP 500, I feel safer. Even then, I pay a premium to get this safe asset. I don't care 29 year is not that different than 30 year. As long as I have that 30 year, I feel much safer because I cannot take the loss. And the real financial earthquake actually happened in 1998, August 17th, when Russia government announced that they're gonna have a national debt default. That's the time when not just small player within the financial market start getting panic, even the bigger player like Goldman Sachs, Merrill Lynch, Lehman Brothers, etc. start having panic. Suddenly, the mathematicians within LTCM realized all their 1,000 different investment combo, they all correlated to each other. Just like you have the company, you have 100 best worker, best talent in the world. But because one person have COVID, everybody have COVID, suddenly no one start give you any productions. That is what happened to LTCM at the moment. To be quite frank, LTCM don't actually own any Russia national bond because this panic and stomp. It caused LTCM suffered loss majorly. Within a couple days, their cash is lost $1.8 billion. So why don't you sell whatever is losing money? The answer is they want to, but because how big sizes they are, they cannot find anybody to even take over their assets. Imagine they have 1,000 tons of apple. Who in the right mind will buy that much apple when apple is already flew in the market for zero prices? At the moment, even then, the market is very panic. However, like I said in the coins example, as long as they can wait this period of time out, market still will converge back to normal, and all of the money lost, they will earning back. Plus, they will be rewarded with even higher profit by taking this risk. What actually make LTCM bankrupt is not even the panic of the market, it's pure humility. When John Merriweather heard about the news, he started borrowing money from different people, Warren Buffett, Soros, but none of them willing to help him. So he turned to big investment bank, especially Goldman Sachs, to ask of support. Goldman Sachs said, okay, I will give you $2 billion cash. However, you need to give me two things. First, 10% of your whole company equities. Second is you need to expose your trade details. Like, what have you been trading, right? So I have enough confidence to invest in you. Before for LTCM even received that $2 billion, something dramatic happened. One of the workers in LTCM reported that he saw one of the Goldman Sachs workers come into his office, go through all the paper and make big mess. They find their trading detail and a copy on his computer, bring back to Goldman Sachs. Even then, Goldman Sachs said that never happened. However, within the same day, the big search happened. Goldman Sachs started clear out all the assets the LTCM owned. Because the supply demand, this has suddenly become who sell their assets later who will suffer greater loss. And the $2 billion, don't know where it went. And remember, in order to earn money through the little percentage of market abnormal, lots of companies borrow them the money with a very low interest and almost zero down payment. And now, because they heard about the LTCM problem, they suddenly asking them to pay a lot of insurance money, which shrink their cash even more. John was like, this is ridiculous. Everybody is stepping on us, and we need cash to survive, because as long as we get over this hardship, we'll earn 100 times, 1,000 times more profit. So he made a decision that he probably will regret his life. He started initiate a letter to his private investor, the person who invests in LTCM in the beginning. Within the letter, he do admit that 50% of the cash is lost. However, this is one of the biggest opportunity to invest. As long as the market back to normal, all this money will become profit. The sad thing are, before the last investor to receive this letter is already being posted on Bloomberg. Soon enough, Wall Street Journal, New York Times, all of these financial reports start posting this letter and make everybody know they're in some deep trouble. Of course, within those financial report company, they have one of the high click, but that actually push LTCM into the doom. In the beginning of the year, LTCM have about 5 billion cash within their hand. Less than 9 months, their cash shrinking down to 400 million. When we look back, lots of people said they take too much risk, they take too high of leverage. But the reality is, when their cash down to 400, it's not they want to increase the leverage. It's because everybody is stepping on them, try to exploit them, that cost them losing lots of cash. Net worth of trading is not changing, it's 100 billion. They even ask Warren Buffett to help. Warren Buffett do the same thing like all other investment bankers. They said, how about this? We will invest you 250 million and get your whole company. The whole 100 billion assets belong to me. You only get 250. In another term, all of you, net loss, all out game, can never back to trade. And at that time, he's still on the ice camping trip, on and off on the cruise ship. John Meriwether feel very disrespect, and of course he say no. In the end, John Meriwether literally said, how about this? Everybody is step on me, everybody is doing me dirty. I don't care no more. At worst, my company bankrupt, I can create another one. My coworker is Nobel Prize winner, they can back to MIT and Harvard to teach, to be the professor again. But all of you will suffer majorly. And of course, this report is already reached to the Federal Reserve and the government people within America. When they see how much trade they hold, it literally shocked the president of Federal Reserve. Greenspan even said, if they go bankrupt, I'm not scared the trade will go down. I'm more scared there will be no trade anymore. So why does Fed care about a little hedge fund like this so much? Just a couple $1 billion of loss, why would they care? Here is one of the hidden clues we talked about before. In order for them to hide their strategy, they making deal with other people, plus 50 times higher leverage. All the assets plus leverage between these 1,000 different banks around the world is over a couple $1 trillion if they decide to dump all of them in the same time. For that exact reason, the Fed actually initiated the meeting that we mentioned earlier when Warren Buffett have phone call with. Within the meeting, all biggest investment banker within Wall Street attend, and even the biggest bank from all over the Europe also attend there. New York Stock Exchange, government treasury, and the Fed chair from New York attend. Fed chair really want to let this deal with between them because they don't want other people to believe that if you messed up, government get your back. So he initiated the meeting by saying this. They need $4 billion cash right now, within today. Otherwise, there will be no trade. You guys better figure out. After saying this, the government people and the Fed chair start laying back, let people have a conversation among each others. To pull out that $250 million per company is actually very difficult. The CEO of Goldman Sachs, he suffered a loss of blame from other partner from Goldman Sachs, and he's on the borderline of firing. Now you want him to go back to tell other partner they need $250 million cash plus what he already lost? And the person who wants to save LTCM the most is actually the representative of Merrill Lynch, Shashenkov. The whole Merrill Lynch net worth cut in half. They lost about $19 billion within a couple weeks. And he even have his personal investment. If LTCM just bankrupt now, he will become homeless, literally. And everybody, including Shashenko, put their hope on the one investment bank called Bear Stearns. They're the only company didn't give them the no insured money, no interest rate fund to LTCM. And plus, they understand hedge fund business the most. So they probably will have the most ability to help them. However, the representative of Bear Stearns named Kane rejected. He said Bear Stearns not gonna give a dime to that dying dog. Shashenko was like, what do you mean? There's a systematic risk. If you don't do anything, no one will have a good outcome. You need to look in a bigger picture. And the Bear Stearns representative Kane was like, no, you guys are in a deep mess. We were never on the same boat. After saying that, Shashenko even tried to punch him, and he gets stopped by the Federal Reserve chair. Federal Reserve chair really pulled Kane aside, have a private conversation, say, hey, listen, you really need to help this. It's time for you to stand up. But Kane say, no, regardless what you tell me, we're not gonna put a dime to that company. Even more, if their cash below 300 million, we're gonna take whatever they have, which may cause the death of LTCM before even this meeting ends. This interaction make all other big investment banks, include the Fed and the government people, very dislike Bear Stearns, and it causes the death of Bear Stearns later on. In 2008, when housing market crash, when there's a Lehman Brothers moment, just like all other biggest investment bank, they need cash support. However, the Fed actually help everybody else besides Bear Stearns. Even then, in the end, they do save them. However, they force them to sell the whole company to JP Morgan and make them lose the 100-year-old name investment bank, Bear Stearns. That's why you probably never even heard about them until this day. After 2 hours this chaotic meeting, people almost threw hands. They finally come to agreement. They raise over every bank $36.5 billion to help LTCM get out of the deep mess. Within that day, the Fed even stopped all bank transfer until 6:30, just to make sure that cash will directly go into LTCM. Within the month, they even drop interest rate to US dollar 25 base point, just to in order make this small hedge fund not bankrupt and make people have more confidence into the market. And this rate drop only happened 4 times, include Lehman Brothers, internet bubble crash, and 9/11. Finally, after 2 years, they clear out all the assets of TCM, and American economy is saved by the emergency meeting. Now you look back, LTCM's those mathematicians are actually right about statistic, flipping coins 50%. However, what they ignore is humanity. The causes of the death is not miscalculation, but a lot of people try to step on them to save themselves. They are winning the calculation of possibility, but they are not winning the calculation of humanities. And until today, the top 10 biggest investment bank, 5 of them, still doing the same thing LTCM is doing. And God knows when is next earthquake gonna happen. And that will be all for today's video. I really hope you learned something today and enjoy the story. It cost a lot of my time. And I will see you very soon. My name is Paul. I see you next time. Bye.